Welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President of Gratz Park Private Wealth, and just joining you to give you a little snippet of what happened in the month of June as we rounded out the second quarter and the first half of 2024. So the S&P 500 gave us another great quarter, even though it didn't start out so well. April was a month where we saw consolidation after such a strong first quarter. But May and June really sparked investors and put them in really good moods as we finished the quarter up another 3.92%. So year to date, at the end of the first half, the S&P 500 is a positive 14.48%. Excellent 6 months to any year, let alone usually a good solid year with those type of returns. Now, what has created that? Well, it's the same message we've been giving since the beginning of the year. The anticipation of Federal Reserve rate cuts, downward trend in inflation, solid corporate earnings, and we've been seeing that. We've seen some misses, but we've also seen some companies raise their guidance for the second half of the year. And then finally, a presidential election year. Yes, believe it or not, presidential election years tend to be positive. So all of that being said, we were anticipating a Fed rate cut. Our outlook was May. We've pushed that timeline out to September, maybe even November, as we see inflation had declined, but it really kind of held steady there for a while in that first quarter and even into April before finally starting to see it downtrend again, where we are in core inflation at 3.3%. So with a downward trend in inflation, the economy slowing down just a bit, we are getting economic data that is showing some softening in jobs and consumer spending. And so that really gives us a clear picture that we are probably going to see a rate cut at some point in the second half of this year, which is good for stocks. Secondly, corporate earnings coming in solidly. I think this movement with generative AI has created some more efficiencies in companies, so their profit margins are sharpening up. With that, and for the most part, the economic growth has still been pretty steady. They did revise first quarter growth upwards from 1.3% to 1.4%. So still solid growth in the economy. And then the final thing, as I mentioned, this is an election year, a presidential election year. 93% of the time, those years are positive. The stock market doesn't really mind whether it's a Republican or a Democrat that takes office on that first November and Tuesday. What it does want is someone to take office or someone to be elected to take office in January. So let's hope for an election that does create results on that first Tuesday in November. Leading up to that, our anticipation in July tends to be a pretty good, favorable month for the stock market, on average up 1.73% historically. I think that trend is going to continue with the news that we've been getting. It's more like a steady news, nothing drastic changing in the economic picture, but still favorable that we are seeing downward trend in inflation. Again, meaning that we should anticipate a Federal Reserve rate cut. So that being said, we are really telling clients to stay focused, stay disciplined, and stay invested. We expect the second half of the year to be positive as well, as we move through this third quarter. As we enter the third quarter and finish up, we will see if we get another favorable quarter. Thanks for joining me with Gratz Park, Round the Table with Gratz Park Private Wealth. Until next time.